Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our bi-weekly stock market analysis for the week of August the 16th, 2020. What a week. The S&P 500 closed just short of reaching its all-time highs, as well as the NASDAQ has seen a little bit of a pullback. Now, we still see that the market is still overall very, very bullish, but is there an opportunity for the bulls to showcase a little bit of exhaustion? And we do believe that it's there. We're not ready to call a full bearish market at this standpoint, but our ranges are getting smaller and smaller, which is a clear indication that the market is looking to pause. And this is definitely showcased with the S&P of this past week with a very finite range in comparison to what we've seen in the past. And certainly the NASDAQ has been leading the way from the tech-heavy COVID type technology plays. There could be some aspects of the market looking to pause for a little while and regain some strength or establish a base to push us just that much higher. We've seen over the last several weeks a huge run up on the NASDAQ, and we'll certainly showcase that in our review, but the markets are looking for an opportunity to kind of pull us back. Now, if we do look at all of the macroeconomic news that we are seeing across the board, there is a huge policy coming out of DC that is really holding up the market as a standpoint, as there is the perception that the economy is actually recovering. But we did see a number of economic reports over the last few weeks that are contrary to that. So what could be holding this market up? Now, we'll dive into that in some subsequent slides, but we do want to highlight that across the board this past week, all major indices closed above their prices for the week. Now, toward the bottom, we have seen some pretty significant selling off both on gold and silver. So this could be an indication that some profit taking is certainly being taken place, but at the same time, where is that money flowing into? And that's our goal, is to try to identify where are the bull markets. But we still continue to be long gold, and we have identified a potential buy point for us to re-enter. We did take a little bit of profit this past week, but we still feel gold is very much of a long-term play. So this upcoming week will be very key for a lot of industries as the overall market looks to see earnings reports from a number of major names. Coming into the middle part of the week, both Tuesday and Wednesday, we're hit with a number of bellwethers: Walmart, Home Depot, Kohl's, Advanced Auto Parts on Tuesday, and then on Wednesday, I'm enthused to see the outcome from Lowe's and Target in comparison to Walmart and Home Depot on Tuesday. L Brands after the bell on Wednesday night, and then kind of closing out the week with Alibaba looking at, hey, has this impact of COVID impacted across the board internationally? We do believe so, and we'll have the proof in the pudding, so to speak, as we close out the week. Now, we do want to advise that those that may have been on the sidelines to this point, it doesn't hurt to wait one more potential week to see how the retail plays off, because there could be some opportunities for some major names coming in at discounted prices after their earnings. So as always, we invite you to subscribe and hit the like button at the bottom, and we'll start off with the S&P 500. As always, we'll start off with the S&P 500. As you can see, very bullish trend over the last number of weeks as we continue to articulate. But what I want to call your attention to this week is this candle here, which is this current week past, on how the S&P, albeit very, very bullish on some good news from an earnings perspective, a lot of announcements from some key stocks in the index, that it still failed to meet its all-time high of 339.08, coming in on a high for this candle of 338.28. So very short, but at the same time, we still closed outside of value, which still showcases a little bit of a bullish nature coming off of this base and then projecting up higher. Now, our hypothesis, given that it is crossed outside of the value at 334.41, there is a higher potential for us to kind of consolidate and look to fill in some of this volume at these higher prices just outside of value. Now, this also could be accelerated to the downside coming into this week. As we stated on the previous slide, a number of major companies are reporting earnings on the retail sector, and there is a good portion, obviously, of the economy that's based upon retail. So this could be the week of any type of potential rollover. Now, we do want to watch for any particular bullish nature subsiding and the bears stepping in if we do breach below that 330.41. So that's something we want to kind of watch out for over the next few days as we move on to the NASDAQ. Very similar in nature. You can see this longer term trend line that we have called out going back into the previous year. And if we scale out to the monthly chart, you can see it even stronger on how going back all the way into 2018, we can see a little bit of a potential rejection, roughly about that 274.75 level. Now, if we come back to the weekly, we can see we did make an all-time high on the previous week, but we were failed to take that out this coming week past, and that's somewhat of a the bullish nature kind of subsiding and slowing down a little bit. And then certainly we see a little bit of a doji candle here where the opening price and closing price are very, very close to each other, indicating equilibrium and some type of balanced nature. Now, what we do anticipate potentially for the NASDAQ as things continue to fluster is another retest of this trend line. And certainly if that fails for this upcoming week, I do anticipate some type of rolling over, potentially to the bottom of this larger balance area that we've had over the last few weeks. So we do want to kind of watch that and see if the bears can begin to take a little bit of control. And as we move on to the Russell index, you can see that she is also having a little bit of a tough time breaching this longer term trend line that goes back right to the beginning of this year. And we do see a little bit of rejection right here and kind of continuing down again with a little bit of a large topping tail there and kind of closing on a little bit of a spinning top chart pattern. Now, we do anticipate the Russell continuing to move in a sideways fashion for the remainder part of this upcoming week, given that we have this high volume node there. So there could be some type of accumulation to establish a base and then try to retest to break out towards this next high volume node that's roughly about 165. So we'll continue to watch that. There is clear support to the downside. If we do see further rejection of this 155 level, we do anticipate a little bit of a push back down, roughly back into range at 150, which is the next higher volume location, and even potentially getting back to the POC, which is at 146. So we do want us to continue to focus in on the Russell. Obviously, the Russell is made up of majority US-based stocks, so there is a little bit more sensitivity to economic news that is anticipated throughout this week, and at the same time having a larger impact to the recovery of the overall economy based upon COVID-19. Now, we'll take a look at the Dow. As again, we regularly don't trade the Dow, but again, the Dow is showing a little bit more visual signs of a particular movement from a sideways nature even to a down, as it's butting up to a very strong trend line going back into last year, where you can see that this has been touched multiple times and is held very strong, and it just happened this previous week. So that level we do want to watch to make sure that to see if we can retest that 280 level as a potential breach. Now, if she does continue to move in a bullish nature, and if we do breach this level, I do anticipate a push up to the all-time high in the Dow, coming in at just above 295. So we'll take a look at that as well. Now, if we do see some rejection moving forward of next week, where we do come back inside of range, we do look for a breach of this low of that this past week. If that does take place, we do want to see the 268 level, which is the point of control, the highest volume within the range over the last year. So a little bit of uncertainty from the bulls perspective as we continue on for the next few months, and certainly over earnings. If we take a look at gold, you can see a very significant pullback right at that 61.8 extension from a Fibonacci perspective, and very similar to what we've called out in some of our previous indices, where the bullish aspect was not able to be maintained week over week, where the high of this past week did not even get close to the high of this previous week. Now, all things being equal, we do anticipate some type of support back at the low of this candle, roughly at the $140 level. You can see a significant amount of volume that was entered in here at 149 and 189.79. We do want to watch that moving forward to see if that level can continue to hold. I do anticipate some type of retouch to the lows of this past week, and if that does take place where that item is held at that price, we will look for a rebuy, for a retracement right back up to the top side, kind of having this push-pull action and establishing a base moving horizontally over the next week, 2 weeks, with some accumulation taking place at this high volume area here, roughly between 185, 187, to have a bullish continuation upward and retest these all-time highs, if not breach them on moving forward. So there always is that opportunity for some consolidation back within range to allow new traders to obtain positions and to help propel it right back forward for potential all-time highs. Very similar to what we see on the silver side, as an opportunity for some of the bulls to take some profit taking and look for other opportunities for new entrants into silver to step forward. So if we do continue to see a little bit of a bullish sell-off continuation, there is a nice retest opportunity at the low of this previous candle, coming in at just above $23. But then also we do have a very significant high volume node back at that level as well, looking at support. Now, the structure of this momentum of both silver and gold over the last few months has been somewhat parabolic, so there is this natural indication of a potential pullback to some type of support, and then look to kind of move forward. That classic Zorro pattern that we regularly talk about works in all typical charts. So this week will be a very busy week on the earnings front. We will continue to look for the markets to establish some type of base. I do anticipate a little bit more of a pullback after some of the earnings that are announced, but then the market is, quote unquote, somewhat due to take a rest and a little bit of a breather to continue to propel forward for the latter part of the year. And we will continue to watch that as always. Don't forget to hit the subscribe button at the bottom. And if you like what we are providing to you, please don't hesitate to provide some feedback. At the same time, always remember, it's your money and it should be under your control. Take care.